All right, good morning, traders. Happy Tuesday to you. Welcome back to the live trading room. Give me a second. Let me get my backup recording going since I tend to blow stuff up. But hope you guys are doing well. Hope you guys can hear the voice, see the screen. We've got the day before Fed Day. We got U.S. interest rates, U.S. interest rate decision tomorrow. In fact, I didn't start my regular recording. There we go. So concerned about starting the backup, I forgot to start the regular. But interest rate decision tomorrow. So you know what that means. If you've been with us for any time, you can expect a little bit of a slower movement in the market. Again, nobody knows what's going to happen. Therefore, nobody wants to kind of put anything relevant on the table before it happens. They'd much rather wait for it to happen, and then play the result. So usually on days like this, you see a lot of consolidation. We do have a few opportunities on my watch list. Most of them are yen crosses, so we do have some stuff to look at today. But just be warned out there in the market for you guys that are new. Expect things to be slower than usual. That is normal. And of course, just be a little bit careful specifically with dollar crosses, even though there is a kind of a trickle down effect wherever you go. So I didn't have a set opportunity I want to take a look at. I'm gonna name off a couple pairs here. Let me know if any of these are interesting to you, or if there's one that you wanted me to take a look at to start things off. You guys do know we live stream kind of the first pair we look at, or first chart we look at for the trade of the day. And looks like, well, there we go. John's got one already. He says, looking at what I think could be a nice zone to look for shorts on the pound dollar 115 level. Good Fibonacci confluence. Personally, haven't back tested this setup, so I won't trade it. We can look at that, John. Sure. What time frame or time frames are you looking at? What kind of time frame cycle do you use? Are you a 4 hour? Daily is a higher time frame, or strictly just only 4 hour here? All right, so we'll start on the daily. We'll go through our IPDE process. We'll go down to the 4 hour. Is 4 hour the trading time frame as well, or do you go any lower than that? Just so I gotta put myself inside your mind and analyze this from the eyes of John. There we go. That'll be our next OG's the genius when it comes to like technology. That'll be the next app, OG, where instead of signal services, right? We don't need signal services. Instead of signal services, we create something. I push a button and my consciousness goes into your consciousness, and you start to see what I see. We call it eyes of Akil, eyes of trader. There we go. That sounds good. George says, by the way, thanks for your response. Yeah, that was a good question, George. I have gotten that. George asked a question the other day about kind of breakout principles / false breakout principles with gaps. And I had the same exact question. I had seen, I don't know when I saw something like that, but I did see something like that before. And my first reaction was, what the hell do I do here? So luckily I had seen that before and had the same thing as you, where I'm like, I don't really know how to do this. So I had ran through that scenario in my head. But yeah, we were looking at it the exact same way. It's just weird. It's just weird because that gap is like, it comes down to how you treat the gap, I guess, at the end of the day. And for the longest time, actually, I didn't treat gaps as like candles. And then, and I increased my knowledge in the market and realized that I should be. But John says we go down to the 4 hour for the first chance, or 1 hour for the first chance. Okay, so let's look at our daily chart here. Again, John's looking for shorts. Nothing he can trade yet, but just going through the analysis, practicing as we should. So let's go through our IPDE process. Identify, predict, decide, execute. The first thing I want to do is I want to identify where price is trading at. All right, so I look at my chart here. I'm going to sneak up to the weekly just to make sure we don't have, okay, that's where that was. Look at my chart here. We have a previous structure low back here from March 2020, dun, 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 right? March 2020. We have recently retested that low, and what have we done? So if you guys are new, especially for you guys watching the live stream that may not know this, We have a process called IPDE. It's a 4-step process. I highly recommend you adding this process to your routine. It could be something else. You can name it something else. You can take a different step. But having a process to your routine keeps you running like a fine-tuned machine. Didn't mean the rhyme there. But it keeps you out of trouble. It keeps you focused on what you're supposed to be doing. So ours is identify, predict, decide, execute. We want to identify what price is doing, what price is done, where price is at. Based on that identification, we want to predict what do we think price is likely to do next. Then we want to decide based on that prediction if we can get involved or how we can get involved or where we can get involved at. And then finally, execute is pull the trigger. So we have recently come down to this previous level of structure. And have we violated or held structure? So we have held currently, right? So we have spiked below, but we have not closed below. And we know that we need a break below and close below to have a violation. So currently we can say that you can identify that prices come down to a previous level of major, I think we could all agree that's major structure support. And we have held, we have 2 rejection candles, right? Bears tried to push down, bulls fought them back. Bears tried to push down, bulls fought them back. We have a nice, maybe not that you're not your most symmetrical one, but a nice little double bottom action right here. And we're holding previous structure, right? So that's what we identify on our daily. So what I want to do here, I want to mark off an important level, right? And I want to mark off this level right here. And why is this level, this lower soon to be red line, why is this level an important level? Yep. Because those are our new lows. You do have an inside bar. Yeah, well done. I didn't even peep that. Yeah, nice. And potentially followed by a higher high, higher close, although the day has just begun, right? This lower level is going to be our extreme. So if this level can be violated, that's going to be our kind of our alert to start predicting shorts. If this level is not violated, anything that happens within this level still holds or still works within kind of the overall premise of we are holding structure. So it's important that we know our points. I always like marking them off because as you go down to lower time frames, sometimes you forget. So I like to mark them off. So let's go down to the 4-hour and we're looking for what price is doing here. And John, you're looking, am I right that you're looking for a violation of that red line for your shorts? Or a different point. And while John, you're looking for higher. Oh no, sorry. George, that's someone else. George says higher. Sorry about that. So while we're typing a retrace to 115. Okay, so let me ask you this. So what about 115 would make you look for shorts? Because does anything about moving to 115, does that change does that change anything in the market about what we identified on a higher time frame? So 115 is up here. So if we move to 115, that would be a nice pullback trade. But would it give us any reason to change our opinion about looking for shorts versus looking for something else? And that's an open question to anyone. Sorry, we're saying John because we're working through the strategy, but that's an open question for anyone else. Would it change anything? I can tell you for me, it would not, right? And John says, I have bear still because the bear trend hasn't been violated yet. Okay, so this is going to come down to, again, back to the IPDE process, how we view the markets, right? And you guys know I have a set way of viewing the markets. My job isn't to tell you that you need to view the markets like I do. It's just to walk you through different opportunities and make you think. So here's the difference in how me and John or John and I are thinking right now. So John is saying that we are in a bearish trend, which we are. And the idea is that this bearish trend is going to continue until it's violated, right? And the violation point would be, well, this is technically not a previous outside return, but it would be the previous outside return. So the way I see the market is a little bit different. And again, it could be because I'm a little bit more conservative as well. So if I see the market in a bearish trend, right? Yes, I am also expecting the market to remain bearish. However, there are certain points that I look for the market to go to, right? So the next point is right here, right? A retest of previous structural low and hopefully an extension, right? Because if we're in a bearish trend, we should extend. Once we hold, right? Once we come down to test this level, right? We should, if we are in a strong bearish trend, what should happen at this level? What should we do? We should violate it, right? We should break through. We should lower low, lower close. We should continue and get another extension lower, right? But if we get here and we do not violate it, that is a warning sign for me. So once we come down to previous structure lows, our previous new structure low in this case, and once we hold, and let's say we get a little bit of a movement like that, right? At this point, and again, this is me personally speaking, I am not looking to sell because we don't have confirmation of the continuation of the trend, right? Confirmation would be what? What would confirm the continuation? A breakthrough, a lower low, lower close. So if we indeed got a lower low, lower close, I can identify that, hey, we have a lower low, lower close. We have a violation that confirms the bearish trend. Now I'm looking for that pullback because I can confidently say, hey, we are in a bearish trend. This is going to be a pullback, and I can look for the next leg down. But the fact that we came and we tested that leg and we held, right? That does not give me confirmation of the continued trend. Therefore, I have no reason at this point to assume that the trend is going to continue lower. And if I have no reason at this point to assume that the trend is going to continue lower, I don't want to be involved in a trade where in order to profit and not lose money, it has to go lower because that means I'm banking on something that I don't actually think is going to happen. So again, I'm not trying to say one way is right or one way is the other. You know, I'm highly against that unless something is blatantly wrong. But hopefully it gives you kind of different views on reading the trend. And as a trader, right, you're going to have to make a decision on how do you want to read it. Do you want to read it as, hey, I am strictly bearish, bearish, bearish until we literally violate the previous outside return, right? And that previous outside return is right here. Or, hey, am I bearish, but I'm going to hold off on opportunities until I get the next confirmation signal. So as we call it, a fresh break. So for me, and I'll walk through again my way. For me, a pullback to 115 wouldn't give me any more reason to believe that this is bearish. And in fact, quite the opposite. I would start thinking, hey, we're more bullish. It's a cheaper area to get involved. But as far as the structural integrity of the setup, hey, what's going on, TradingView? As far as the structural integrity of the setup, it doesn't violate anything. Now, well, I'll tell you what could be interesting. Another way you can attack it if you're aggressive. But let me go to this question. John says, okay, could also use that 115 as a potential target for a counter trend trade. Yeah, but then that goes against your theory as well, John. Right? If it's a counter trend trade, but we're see that now you're on both sides of the market. Now you got now it gets a little confusing because if we're predicting that, hey, we're still heavily bearish, are we predicting a counter trend trade necessarily? And again, that could be a yes or no, but it depends on how you view the market. Now here's the next question. Okay, if the daily did not have a double bottom and the 4-hour did. Sorry, I'm a little late to reading that. If the daily did not have a double bottom, the 4-hour did, would that change my opinion, or is that what the question is? I'm a little late reading it. My bad. If the daily did not have a double bottom, and I don't think we have a double bottom. Yeah, so we don't have a double bottom on the daily. I guess you can look at this as a double bottom. No, it wouldn't change my opinion. The only thing that would change my opinion is a violation of that structure level. So what would change my opinion on this is if we took out these 2020 lows, right? And by take out, I mean violate. that would change my opinion. Because again, if we go through, and I'll write this out, and this is again why it's so important to have this process, right? If we go through the IPDE process, right? This is our step-by-step kind of guideline to trading. And it's like a flow chart, right? You start with one. If you don't pass one, you don't go to the other. So if I identify a lower low, lower close, right? L3C. Let's say I identify a lower low, lower close. Now my prediction is that price is likely to go lower. If price is likely to go lower, now I can decide, okay, I'm going to enter on a pullback trade, excuse me, if we pull back to 115s, and then my entry could be, again, a lower low, lower close, right? You see how one flows into another, right? I identify this, so now I can predict that. Now I can look for that, and now I pull the trigger on that. In this example, I identify a holder structure, right? So if I identify a holder structure, can I predict that price is likely to go lower? It's a horrible L, but you get it. Can I predict that price is likely to go lower? I can't. So now I never get to the pullback. I never get to this, right? I'm stuck right here, aside from looking for like a counter trend trade. Does that make sense? This is why I love this process, because it is really like it's a series of security checks. It's like you're walking through a secure building and you got to get through one door and you get checked and frisked, and you pass that and you get to another door, right? And say it's like Squid Game, where you pass each game and you don't die. You know they're doing a real life Squid Game? Not to get too off track, but a real life Squid Game. I was going to apply, but then like I read through the fine print and I didn't see anything about not actually dying. And that worried me some. I've signed bad contracts in the past. I was looking for the part that said, you won't actually die. This is just a game. I never saw that. So, I mean, but part of me, you know, my former athlete, absurd male confidence is like, you know, I'd win anyway. Sucks for everyone else who's going to die. I'll win anyway. Of course, that was the first thing that came to my head. That's how you can tell I've been away from sports for a little bit. The old me would have been like, blah, 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 blah. Losers may die. That doesn't concern me. I'm not going to lose. Now I started having, started having more realistic expectations as I get older. And I'm like, I could die. I might get second. That would still mean I die. So I got to get back to my blind confidence. I don't like this risk reward thinking. Trading made me soft, guys. Whatever happened to just looking at a market and pulling the trigger and seeing what happens? Whatever happened to that rush? I missed that rush, right? You're trading roulette. You pull a trigger, buy or sell, and you just sit in it. Those were the days. Now we're all professional now and measuring risk reward. But my death would be witnessed. It would be witnessed. You're right. Yeah, but I don't want to go out that way. I don't want to go out in the game. I want to go out doing something cool, like saving a life. Or like winning a race. I don't want to go out because like my knee buckled and I fell into a pit of lava. That's a soft way to go out. I'm going out hard. All right, back to this deal, because we want to revisit this a little bit. And I do want to go back to a short opportunity that you could look for. Because this is, not that I think anything's going to happen with pound dollar today, because we're going to do nothing ahead of tomorrow's interest rate decision. But in general, for technical analysis, this could be a pretty cool lesson. John says, so even though I have a kill zone established because everything meets the parameters, the price pulled into the kill zone, I am within my rules. A smarter choice would be to avoid it because the markers in the chart give me. Well, again, so let's go back to the kill zone. This is the process, right? So when in this process do we create our kill zone? And this is going to be perfect proof. Whew, that's a tough one. Perfect proof of the perfect process. Spitting all over my monitor when saying that, right? I would definitely take a selfie on my way down into the lava. Like, look, ladies, I told you I was hot. And then I'd burn. But so our process, right? Where does identifying a kill zone come into our process, right? Probably right here. Would you guys agree? The D? right? We're deciding where and how we want to get involved. That's when we would measure out our kill zone, right? Maybe the P as well. The P is more, yeah, the P is going to be a multi-level prediction, right? What direction is the market likely to go in? How is the market likely to get there? So it's a combination of this, where we're predicting, hey, we could pull back into this level, and then we could decide what we need in that level. So if we never get to the point where we're predicting shorts, right? If the P is a three-step process, right? If the P is what direction price is likely to go in and how we're likely to get there, we'll just leave it at those two for there, right? We would never actually get to the kill zone, right? Because we're not actually looking for a short opportunity based on what we identify. So do you see how we would never get to the kill zone? So I'll draw this out again real quick. And if I'm a trend continuation trader and I see something like this, right? I see lower low, lower close, right? Boom. Lower low, lower close. I identify a lower low, lower close. I'm predicting price is likely to go lower, all right? So if price action is likely to go lower, how are we likely to get there? Well, we can either go straight there or we can pull back, right? So if we pull back, now I measure my kill zone, right? And I say, okay, if price pulls back to this level, this is where I'm looking for blase, blase, blase to get short, right? Does all that sound familiar? Give me a yes, guys. And I apologize, the live stream's still going. Switch servers. What are we doing? Hold on. Hold on. Technology just did something funky. I've never seen that before. Give me a second, guys. It just kicked me out of my own room. How are you going to do a technology update right in the middle of this? What are you doing? Give me a second for you guys watching the live stream. Yeah, I got the live stream's running fine. They just did like an update in the middle of the live room. I've never seen this. Been doing this for 12 years. I've seen crashes, but never this. Hold on. So bear with me. Yeah, bear with me. Perfect time to hit the like button. Perfect time to hit the like button. Or ask any questions if you have them. This is horrible. What if I just exit? No, I can't. I can't even refresh. They're literally doing something where they're changing servers of what what servers they're using. So it's not even a refresh. It didn't crash or anything. It's just I've never seen this in my life. I'm going to try and go to a different room here and see if that makes a difference. Because I hate to stop this in the middle of a great conversation. We're making some progress. Yeah, they're redoing their servers. Oh. It's ridiculous. Yeah. Look. the message came up, said we are changing servers in 3, 2, 1. Never have I seen that before. All right. All right, give me 1 second here. Yeah, we're gonna do a little bit of a pause, guys. I'm gonna stay on the live stream here, but a little bit of a pause while I get things situated. Just hold on for a little bit. I'm going to give them the YouTube live stream link so they can head over there, and we'll try reloading at the first break. But we'll get through this. Hold on. This is ridiculous. Ridiculous. Someone's going to get a sternly written letter. All right, let's see if we can get them over on the live stream. Then we'll continue our conversation. It's horrible, OG. Let's have some words with them, OG. You know, when you guys are there, we continue our conversation. It's gonna be a little bit of delay. So forgive me. That's why I don't like doing the kind of the live stream on YouTube. But yeah, we'll try this until they reload their servers. Yeah. So what happened was, we'll get back to business. I got a message, a message that said we are changing servers in 5, 4, 3, 2, boom, and that's why everyone got kicked out. Which I've been doing this. Oh, now it's back on. now it finally came back on. So you guys can head back over at your leisure. I'll leave both on. But man, I've been doing this for what, 12 years. I've had crashes and freezes. I don't want to jinx it. Never a change of server. So that's new. Again, we're just too popular, OJ. We're just too popular. But I'll load up the live room. You guys can head back over there if you want. You can stay here. I'm going to keep the live stream going until we finish this conversation anyway. So whatever works best for you, and I may have to reload it anyway. But we were talking about. Give me a second here. We were talking about kill zones. So drawing out our kill zone, that's part of our predictive process, right? Drawing out the kill zone is part of our predictive process. So we only draw out the kill zone after we have a directional bias, right? So if we look at the IPDE, the identify, right? That's what gives us our initial directional bias, right? We're identifying what we see on the market. We're identifying what we see in the market. We are predicting what we think is likely to happen next. And then based off that prediction, we're trying to define a zone or predict a zone. Hey, if price action comes into this level, this zone, then we're likely to go lower. So that's when we draw in the kill zone. But if we identify a hold of structure, do we ever get to the point where we're predicting a move lower? If you're following that way of reading the markets, if we identify a hold of structure, are we ever predicting a move lower? Okay, so if we're never predicting a move lower, do we ever get to the point where it would be of any value to draw a kill zone? So in theory, yeah. Even though you have a kill zone, the kill zone is technically irrelevant because it doesn't fall within your overall theory of the trade. So it's very similar to like what we talk about where we say it's the what is not as important as the where. So let's say like I have a random double top, right? Do I want to short this random double top? No. Well, why not? It's a double top. We know we're supposed to short when we see double tops. Well, because it's not in a location where I'm looking to short. So the same thing with the kill zone, right? We're going to have kill zones all over the place, but the only kill zones that are of value are the ones that come within our overall prediction of the market. So yeah, even though you have a kill zone, I may be forgetting the question a little bit, even though, because I lost the chat when I reloaded, even though we have a kill zone, the kill zone may not be relevant if it's not within your overall prediction. But this also goes back to your overall prediction. So if you're predicting that price is likely to go lower, then yes, that kill zone is going to be relevant. If not, then it's going to be irrelevant. Now, something that would be interesting here, and again, you got to keep in mind that the markets are probably going to do nothing today until tomorrow, is that we are putting in a consolidation here, right? So this may end up being a high and tight flag, right? In fact, I'd already say it is. We have two touches, right? Do you see this consolidation? Or a low and tight flag, I guess you can say. So this is a level of consolidation, nice little sideways channel, right? We know that contraction leads to expansion, right? Market will break out one way or the other. We'll either break out to the upside or we'll break out to the downside. If you're someone, excuse me, that has a bearish bias, right? This could be a good breakout pattern. And we know there's three ways to trade breakouts, right? One is load yourself up prior to the breakout. So if you have a strong bearish bias, I would load yourself up right there, because this is going to give you a risk reward that looks like this, right? Stops right above the highs, right? Because if we go above here, you're wrong, right? Breakouts to the low, we didn't predict the move lower, but somewhere lower, right? That's one way to do it. Another way is obviously wait for the breakout and wait for the retest. But this would be something that where if you had that bearish bias, you can also take advantage of a situation here, predicting the hold of this low and tight flag of this consolidative period, and then ultimately a breakout to the downside. So good conversation, man. Glad you brought that up. Does that make sense? I'm not saying you have to agree with it, but it does at least make sense, at least give you something to ponder. And for you guys that are watching the live stream, if it was a little bit over your head, I would say go back to the basic principles of how to read a price chart. This is what it's all based off of, kind of the new structure high, outside return, new structure low principles, or initial structure high, outside return, new structure high principles. This is why it all goes back to those principles, understanding those principles, understanding what those principles mean in our trading, and then using them as kind of the foundation for everything else. I got a question this morning, and it's been a follow-up question. It's the same guy from the workshop. You guys remember? I think it was Fadiles from the August workshop. The same guy. We had this guy. I mean, I like him. He's hungry for knowledge, but he is not doing things the right way. But it was a trader who constantly, over the 2-week workshop, we kept having the conversation. We kept saying, hey, slow down. Start with the basics. This is confusing because you haven't learned that, right? He's trying to run before he can crawl. And he's stumbling all over his face because of that. And again, I appreciate the effort, but there has to be a right way to do it. And eventually we got to get on track. So I still get questions from him. Today was a question about the RSI, and it was a question about the RSI and how come I got a pullback, but the RSI didn't go oversold, or how come the RSI did go oversold, but I didn't get a pullback, and how can I do this? How can I do that? But it was all of these secondary things that were confusing to him. And why do you think those secondary things were confusing? Because the foundation weren't there. The primary things weren't there, right? He was basically trying to build a stable room on a faulty foundation. And no matter what he used to build that room, no matter what he tried, it keeps falling over. And the problem aren't the materials you're using for the room, right? The problem isn't the type of wood he's getting. The problem isn't the type of furniture. Like it's not, that's not the problem, right? It may seem like the problem because it's like, oh man, every time I put this up, it falls over. Oh, it never holds, right? But we think that's the problem because that's the stuff that we see. That is the flashy stuff that we see. That is the Band-Aid fixes and the makeup fixes, right? Just throw some makeup on it, right? Throw a Band-Aid on it. It'll make the gushing wound better, right? I've got a gaping wound on my arm. Let's throw a little Band-Aid on it. It'll heal up. Oh, the Band-Aid keeps slipping off and the blood keeps coming out. I probably need a bigger Band-Aid, right? No. The problem is the foundation. He hasn't learned the foundation. So everything he tries to build on top of the foundation is going to be unstable and eventually fall. And when it comes time to searching for the answer, right? The answer isn't changing the things that are on top of the foundation. This isn't the problem. The problem is this. it's very similar. Me and Jason have a lot of conversations about dieting and whatnot, where there's all these diets out there. Half these diets are fake fad diets, right? All these diets you see on the internet, like they're not actually real. They're people just trying to sell you stuff, right? But no diet works unless you're what? You guys know the answer? No diet will work, because you could be a vegan and gain weight. I had a friend that went vegan for like a couple months and gained more weight ever before, just because he ate pasta all the time, or vegetarian. And he just ate bags full of pasta, slow, fast carbs, which turn into sugar, right? Discipline. That's the discipline is the key to everything, right? No matter what diet you want to choose, you could be all meat, you could be no meat, you could be some meat, you can eat air, right? But it's all about discipline. I shared a story, and I will let you guys go after this. I put this on Twitter yesterday, where I was proud of myself. I had a good, clean day of eating. Right, I had a rough weekend. Right, we had some gift cards for a restaurant that was closing down, so we just like bought everything that we could from there. Nice little Mexican place, so like everything had like ton bricks of cheese in it. Then I had a wedding to go to, and it was a rough weekend for eating. I tried to eat pretty good, and it was a bad one. Right. So I went to eat clean on Monday, and I felt good. I said, you know what? I'm usually pretty good during the day. And you know where I give it away at, guys? At nighttime. At nighttime. I go to bed. Kids go to bed. It's probably like 9 o'clock. I'm ready for my last little nibble. And I just pile as much as I can in my face, and I feel horrible in the morning. And I ruin everything. And just shove like bags of Cheez-Its and Oreos in my face. But in my head, like I justify, oh yeah, I ate good all day. I deserve this, right? And it's funny because it's the same thing as trading. I don't know how many of you guys have been here. This was definitely me in my earlier trading career, right? I would have a great day of trading, a great week of trading. And then I'd give it all back, right? I'd have like 5 good trades in a row, and I would do one dumb thing and give all my profits back. And then I'd look at it and be like, why was I in that trade in the first place? Or how did I let it get this bad? Why couldn't I just take 5 wins and have 1 loss and be in profit for the week? Why did I have to keep moving that stop loss back? Because I wanted to be undefeated. Lack of discipline. Lack of discipline. Phil says, eat air. I bet I can sell an air diet, Phil. People will buy anything. I can sell an air diet. And I can charge money. I can charge money for. I'll send them a bottle of air. Look, and we'll leave it on this. Not to be crude, there was a lady out there on the internet. She stopped because she had a heart attack. She was selling bottles of her gas. I'm not even lying. She was on one of those shows. I don't know if it was a Desperate House, one of those reality shows. I forgot her name. She was on one of those reality shows, and she would toot in a glass, like a little glass jar, and she'd sell it to you. And she stopped because she was like, she got really, really popular. So she was tooting, like she was eating certain stuff to make her toot, and she was tooting too many times a day that she ruined something in her. I'm not even joking. Lady selling, this is a horrible Google search. Reality star Stephanie Matto made $200K from fart jars. $200,000 farting in jars. Meanwhile, my wife runs away from mine. What am I doing wrong? All right, we're going to let you guys out on this note. Thank you for joining me, live streamers. Appreciate you guys dealing with kind of the hiccups. Hit that like button on the way out. We'll see you guys tomorrow. Good conversation. Is there anything else we want to visit here on the pound dollar? Did we do good with this conversation, or we want to dive